Hi everybody, I'm Serge Kidembi from Trading Wall Street TV and thanks for joining me for this week US market reports, the week ahead and time to trade the markets. Okay, without further ado, let's begin. First of all, let's have a look at the economic calendar for the following week, for the next week, and what we can see, we have nothing for the US, nothing of great impact, nothing important for the US. We have China inflation rate year over year for June, and on Monday, Monday, July the 10th, and first China and then Germany, balance of trade for May, and on Tuesday, July the 11th, Australia, NAB business confidence from June. Okay, so now let's have a look at earnings. And no, sorry about that. And here I'm gonna have a look at the big companies and what do we have, for let's say from Monday, July the 10th till Friday, July the 14th. So we're gonna have a look at this one. What do we have? We have Barracuda Networks. Next we have Pepsi Co. Very important. Here you have the earnings per share estimate. We have Club MYCC. Next we have Delta Airlines DAL, earnings per share estimates 1.64. And on Friday we're gonna have the banks. First of all, we're gonna start with Citigroup, earnings per share estimates 1.22. JP Morgan Chase JPM 1.6, PNC 2.02, and Wells Fargo WFC 1.01. And next week we're gonna have big ones, also the asset management firm BlackRock. We're gonna have for the services Netflix and Service First Bank shares. And next week also we're going to have Bank of America. Remember the big deal, the great news with Warren Buffett acquiring. It's going to be the largest shareholder of Bank of America. We have Charles Schwab, CSX, Goldman Sachs, IBM. So we can see that for that particular earnings season, we're going to start big with big banks and some services, and also consumer goods like Pepsi and stuff like that, and other industrials. Okay, so now that's done, and let's have a look at some news quickly. We're gonna go ahead and have a look at some websites where we can find some great news, some news about the market and what's hot and what's trending. So Market Watch is updating here. Business Insiders in Market Insiders. What do we have? First of all, here, what's happening? Stocks climb on jobs data. Here's what you need to know. Remember the NFP on Friday was pretty good. The expectation was 180, and the numbers were very good, very high, and that was 220. Here we have Jeff Bezos, 7 potential bidders will call a call to Amazon and an ultimatum, or the Whole Foods deal went down. Here, so Amazon is hot. Here, some news about hedge funds, Titan, Putin, the whole thing with the meeting between President Vladimir Putin of Russia and President Donald Trump. Here, what's hot for the stocks? Here we have Tim Cook of Apple, praised for a long and ugly battle. Wall Street reacts to escalating fight between Apple and Qualcomm. Yeah, remember that, yeah. The lawsuits between Qualcomm and Apple, so that's still going on. So remember that's hot. So to have a look at these two firms and these two particular shares, and have a look at the price. So maybe that's gonna be a great catalyst. And remember that Apple's gonna publish earnings on later this month, between the 27th and 28th. So that's huge, Next, what do we have here? We have Blue Orpon is trading at half what it hoped to get in its IPO. What else? Commodities over here, inflection point. Renewables will be the cheapest form of new power generation by 2020. European Union is reportedly preparing to strike back if Trump starts a trade war over steel. Yeah, remember that's huge also, you know, for the steel industry. So yeah, we have news. So take a look at steel companies and stuff like that. And no, yeah, over here, what do we have in currencies? Bitcoin and Ethereum are kind of cannibalizing gold. So have a look at that, the cryptos, and here geopolitical risk is creeping back into the markets. And over here, UK economy, manufacturing had a bad quarter. Yeah, that was pretty bad. So for those of you who are trading the companies over there in the UK, for the FTSE, the Grand British Pound, or the Gilt, so that's great news for you. And over here, bonds, fixed income. Over here, Jelen, David Rosenberg, everyone scared of the wrong thing when it comes to the Fed's plans for its 4.5 trillion balance sheets. And the Fed is losing confidence in a key part of its policy, and Britain faces an explosive debt trajectory in the next 50 years if it ends austerity. So over here, that's it. Over here, the most traded stuff. And what else do we have? No, so that's all the news. So here, for Business Insider, we are done. Next, let's come back over here to Market Watch. Now the page is not reacting, so I'm gonna leave that over here. Wall Street Journal. What do we have over here in markets? US stocks boosted by financial shares. I remember US stocks ended the week higher, lifted by shares of financial companies. The S&P gained 0.6% on Friday and 0.1% for the week. So remember, we're gonna have great companies of the financial sector and the financial industry who will be publishing earnings. So that's key here. Over here, Warren Buffett and Uncle Battle, the billionaire, for his company, the Berkshire Hathaway. Over here, what do we have next? Head on the streets, market not ready for jump in jobs. Yeah, US had a robust more than 20,000 jobs in June. What else do we have? Here, OPEC, for oil. OPEC considers production caps for Libya and Nigeria. So that's huge over here for oil. ECB for the euro. Over here, Sitoku potential suitors approaches Whole Foods before Amazon deal. The whole thing between Whole Foods and Amazon. So Amazon is still hot. Over here, European central bankers for the euro. Over here, we have silver. France moved to lower bank rates to Paris. Okay, the SEC let small companies ignore shareholder proposal in 2017. Sorry. And over here, yeah, talking about stocks. Tesla is hot. So a huge sell-off of more than $80. The shares stocks goes from 380 almost to 300 last week. So that's huge. So if remember that. So here in money, what else do we have over here? Brexit, always Brexit. And what else? Stocks over here. Risky business trading stocks in Hong Kong. Yeah, it's talking about the Hang Seng. The bonds all hot over here. Goldman Sachs, and what else? Deals, currencies. So yeah, that's it pretty much. Over here in Bloomberg, what do we have over here in Bloomberg? Bloomberg, yeah, you have the whole thing with Trump and President Putin and at the G20 meeting. Over here, Merkel. Remember, for those of you who are trading the DAX and European stocks and European currencies, the euro, at the end of the summer, we're gonna have elections in Germany, so that's huge. So I'm expecting, we have to expect move in the euro. With the euro bonds, that's the treasury bond, and what else? And yeah, in the euro stocks 50, and the ETFs of the stocks 600, and also for the DAX and all the related assets and all related equities, like equities in the CAC 40, equities in IBEX 35, and the FTSE MIB from Milan. Okay, what else here? Politics, Tillerson 6 to reassure Ukraine. Air France, for those of you who are trading CAC 40 companies over here. ECB, ECB is hot, so that's the euro. The whole thing between Putin and Trump, that's geopolitical. Over here, North Korea. Britain, Italy banks, remember the stories with the Italy banks with Monte dei Paschi, UniCredit. So for those of you who can go short or short those companies, speculate with those companies, so that's something to think about. And what else? Businesses, Jaguar, and over here Putin Trump, the video Putin Trump, and what else? So that's it pretty much, G20, talking about the G20, the Brexit and stuff like that. Tesla, remember Tesla over here. Tesla is hot, so let's see if next week we're gonna have a follow-up to that downtrend movement, to that huge sell-off. And remember also that Volvo now is gonna start to make e-cars, so that's a great competitor, for Tesla. So remember that. Okay. So that's it for the news. Now let's have a look at the sectors map, the S&P 500, all the sectors. You see, huge week, great week for financials. Remember, we're gonna have earnings over here. And what else? You have Amazon. Amazon always in the news. What else? OPEC and the whole thing with petroleum, with oil. And what else? Nike still doing fine after the earnings 2 weeks ago, and now you see almost 10% rise in share price. And yeah, Pepsi. Remember that Pepsi is gonna publish earnings later this week. And what else? So that's it. And you see the whole thing over here in the defense industry. The whole thing with the crisis over Syria, problems with North Korea, a lot of stuff like that. You see companies that are making armaments, and defense product like Raytheon, Lockheed Martin. So have a look at those companies. The prices are, the share prices are rising, so you can profit from that. Now let's have a quick look at ETFs. Sorry about that. Over here, the indices, the stock market in green, or obviously volatility in the inverted, are going different ways. Over here, stock market in green, fixed income over here in red, the government bonds and corporate bonds over here in red, small caps, mid caps. Over here, the sectors, great week for financials, bad week for real estate, bad week for energy, technology, great, industrial goods, great, and healthcare. Yes, gold, all the commodity gold and all the global miners and other stuff in red. So that's it. Okay, so now let's have a look at the cryptos over here. We're only going to focus on the top three. You see Ethereum remains number one. Over here, silver medal for Litecoin, and the bronze medal for Bitcoin. Bitcoin in third position. Last session was good. Litecoin almost a 10% increase, and that's it. The volume, still huge volume. You see huge volume. $500 million, for Ethereum, $500 million for Litecoin, and less than 300 million, over here for Bitcoin. Okay, so that's it. Okay, and now let's go on here to the charts. First of all, here we have the Dow Jones Industrial Average. So let's break it down. Let's have a look at price action over here. What can we see? What happened next week? You see large and long tails over here. That means rejection. We are rejecting the 21,500 here. So now we're still above, we remain above the 4 weeks moving average, but to me, that's kind of a tweezer top, over here at the resistance level. So maybe, I say maybe, if we have an opening tomorrow on Monday, closer around the 21,400, we can have another bullish trap over here. And if you are going lower below the 4 weeks moving average, and next week we have a close below that moving average, and we go back to retest and try to interact with the 8-week moving average, that moving over here, I'm expecting that move. So I'm very bearish for the moment, and also you have to remember we're gonna have earnings, so that means that probably, I said probably, we're gonna have sideways movements. The market's gonna go up and down. A great earning for Pepsi, great earning for whatever company it is. So we're gonna see a spike, something like that. But overall, one sector cannot save the whole S&P 500. So next week we're gonna remain in horizontal, moving sideways. That's it. Okay, next. Let's have a look at the diamonds. Diamond over here, and that's the diamond here. You have the diamond, same thing as Dow Jones Industrial Average. Same thing over here. I'm expecting, sideways movements. We can see that particular, rejection over here. Long tails. That's a tweeter top over here at resistance. So we are between 214 and over here 213. You have like a $1 range, like a resistance and support. So we remain above the 4 week moving average, but that particular pattern, too long tails like that, long shadows, for me that's bearish. That's the beginning of a bearish movement. That's indecision over here. That's a doji. So be cautious of that, Okay. Now let's move on. The Nasdaq. Let's have a quick look at the Nasdaq Composite first, and next we're gonna move on to the Nasdaq 100. You see here we remain in sideways movements. So now let's amplify it. Let's go closer. Okay, so what am I looking at over here? Sideways movement, bearish, inside week candle, we all below the 4 and 8 weeks moving average. See over here we have a convergence, great convergence points between those two moving averages here, 4 and 8. See, look at the spread, between the 4 when the convergence point here, 4 and 8 weeks moving average, and here 13 moving average. You see interaction over here. Touch it and then boom, go back higher. But over here we are in a inside week candle, type of configuration. So I'm expecting more moves towards the downside. So for me that's still bearish. We're going, and maybe we're gonna have a close way closer to the 13-week moving average over here, around 6,100 over here. Okay, now let's have a look at the NDX, the Nasdaq 100, and here with the Nasdaq 100, same thing, sideways movement. We remain bearish. Already see over here the convergence, between the 4 weeks moving average and the 8 week moving average already happened like 2 weeks ago, and now we have the 4 weeks moving average going below and going to, and the 4 weeks moving average, over here is chasing after the 13-week moving average. So that's bearish, for me. We have long tails also, but bearish candle, strong bearish candle, inside week candle. Maybe next we're gonna have a continuation, so we can move sideways over here between 56.50 and 57.30, but I'm expecting more move towards the downside, you know. So I'm expecting to see that move, you know, over here. Remember, we have a gap over here, and take a look. We have higher lows and lower lows over here. So we're moving towards that particular direction and fill the gap. It's going to be great over here, and that's your 26 moving average over here at 45.70. Okay, so I'm remain bearish. Next, the QQQ. Okay, over here QQQ, same thing, bearish. Let's amplify and let's have a closer look at the price action. Okay, like that. Sorry for that. Okay, now let's put it bigger. Okay, so take a look here, the convergence: 4-week moving average, 8 weeks moving average, 13-week moving average. You see a close right at the 13-week moving average and just below the 4 weeks moving average. Take a look, we are way below the 8 weeks moving average. You know, long tails, you know, closer to interact over here with the 21 moving average. Take a look at the spread, you know, so that's huge. That means volatility. And over here also we have a gap over here at $133. So I'm expecting more moves towards the downside. So that particular move, I'm gonna stretch it like that. And if we bounce here, if that's the bounce, if we're gonna reject here lower prices, maybe that's our support over here, because you see that particular configuration, that's a tweezer top, and we see the same thing with the NASDAQ 100 and with the NASDAQ composites. So maybe over here what we're gonna have we're gonna start to go up, but I'm not gonna buy the QQQ until we have cleared that particular point. You see over here the convergence, you know, that's a 50% of that particular candlestick over here. So what I'm expecting and what I would like to see, I would like to see a close with a green bar, a bullish bar over here, close above that point, above first of all the 4 weeks moving average, 8-week moving average, and over here, and next, and then yeah, I'm gonna be considering a buy over here, because I'm gonna be expecting a continuation to that bullish sentiment, continuation, and going back higher towards the 144.50 area, you know, that particular resistance over here. But since I'm not seeing that, I remain bearish for the moment, and also higher probabilities of sideways movements, you know, between those three particular moving averages. The 4 over here, that's a grayish, bluish gray, or whatever color it is over here for the 8-week moving average, and here in red your 13 moving average. So I'm expecting sideways movements, and if we have more weight towards the downside, so next what we're gonna see a sell-off. Okay, so that's it for your QQQ. Now let's move on. We already had a look at the S&P 500 sectors map. Now let's have a look at the charts, or the S&P 500 chart, and that's the same thing. We see we are moving sideways, but with more bearish, with more bearish weight, you know, over here. Remember the gap over here, pivot point over here, that's your resistance. Another resistance over here, the 24.44. Here you see the range, inside week candle. You see, pam pam pam. That's another inside week candle. So we're moving sideways. We have a huge range over here. That's your range, you know, over here between 24.50 and here 2400. You see, that's your range of sideways movement. So now what I'm expecting, see, we're already below the 4 weeks moving average, but just above, slightly above the 8 weeks moving average, you see large tail. You know, if it's one, it's like a kind of a pointer. You see gap up and then boom, moving higher, you know, towards the that small bullish flag over here. You see your flag, that's a type of a uptrend channel. Also, you know, you see resistance, support, resistance over here, and maybe we are going back to the support. You know, it's like 3 weeks, I'm expecting that, you know, we are going, but the bearish are very shy, you know, so we are moving sideways, and I'm expecting, you know, an acceleration in that particular bearish sentiment and going back stronger towards the supports over here, and maybe we can bounce from here and go higher. But remember also we have a gap, and that gap must be filled. That's a huge gap that you have over here, you know. So, and take a look over here, you have your 26 moving average here in black, around a 2370 points, and lower here you have 2350 points. Okay, that's it. So now let's have a look at the spiders, the ETF, the SPY. And now SPY, that's it, same thing over here. You see over here your uptrend channel, you see supports, resistance, supports, resistance, supports. Over here we are in the middle of the uptrend channel. Over here resistance, we are in the upper half. You see another channel over here, resistance, support, close to resistance, and all-time highs resistance, and now moving sideways. So now let's break it down and let's see. Wait a minute please. Okay, that's it. Okay, that's it. So you see inside week candles, 1 2 3 4 5 weeks. See, rejection of the $245. Now convergence between the 4 weeks moving average and the 8 week moving average over here. Close slightly, you know, below the 8 weeks moving average. Large and long tails over here, rejecting the 13-week moving average. So what now? Now I'm expecting another move towards the downside, but that particular pattern, you know, I cannot consider that point over here a support. That's not a support for me, you know. We are rejecting. See if that's kind of a pivot point over here, another one. So maybe that's your range, you know, for the resistance. You see over here from 238 and over here 240. So as you can see over here, that's the region of the 13-week moving average. We rejected that particular price over here. So maybe we're gonna interact one more time, you know, with that particular region over here with the 240. And what I'm expecting a cross, you know, the 4 weeks moving average crossing below the 8 week moving average, and that's gonna start a, you know, a bearish movement, a bearish sentiment. So I'm expecting to see more downside, you know, over here. But that's a pattern, you know. You have like your stairs pattern, and if the earnings are good and if the algos also are pushing the price higher, from here you can see, you know, that particular bounce. That's the reason why I have, you know, the particular pointer over here, because at any given time the market can go higher, you know. But I'm expecting, you know, also to see that particular movement. So that you see that's a crucial point. So over here, what's going to be the idea? The idea is going to be trading with another strategy. The strategy is going to be the straddle, you know, the straddle, putting both long position and a short position to be able to, you know, to benefit and to profit, you know, from both sides, you know, both directions. Okay, that's it for the spiders, and now let's move on. Oh, first of all, let's have a look at the VIX, the volatility index, quickly. Okay, you see the VIX, you see the huge spikes. Remember last week we talked about that huge spikes we were seeing, you know. We were trading the VIX is at between a huge range, 9.50 and 16.15 over here. So that's almost 7 points, you know, almost 7 points, you know, of volatility. Take a look over here. We have huge spikes, but also what's interesting over here is that we have the all the larger and greater, you know, moving averages are going sideways. Take a look over here. 104 weeks sideways, 208 weeks sideways, 52 weeks sideways over here, 21, 26 and 13 moving averages, you know, going sideways around 1150 over here. And down over here we have the 4 weeks moving average and the 8 week moving average, yeah, almost being like one moving average. You see the convergence points over here at 1050, and now you see a cross up, you know, you have your 4 weeks moving average going up, you know, crossing above the 8 weeks moving average. So that's a bullish signal, but a very tiny and shiny, not shiny but very shy, you know, moving movements towards the upside. You know, that's not strong, you know. That's the reason why you see that sideways movement, but you have to expect large peaks, you know, peaks of volatility like that, you know. That already happened, and you have a huge gap over here, and that gap also must be filled by a complete candlestick, not by a large tail or shadow or whatever you want to call it. So I'm expecting more peaks like that, and maybe we're gonna have a huge movement, you know, with a huge candle, a strong candle filling that particular gap over here. And you know what it means for the markets. It means markets to sell off, okay, because they're inverted. Okay, so now let's have a look at the XIV. And the XIV also is bearish. See over here, long pointer, long tail, long shadow. You have over here, you have your gap. You see interaction. See over here, we remain, that's a bearish candle, but we remain above the 4 weeks moving average. Now take a look. Now what? Now over here, what do we have? Close below the 4 weeks moving average and close right above the 8 week moving average. But during the week, we tested the 13 moving average and a rejection, but that's a pointer, second pointer. Maybe that's a tweezer top, but no, that's, yeah, for me the pivot point is over here. That's maybe a resistance, but you see resistance over here, now support, I don't know. But what I'm expecting, if I follow the signals and the price action, I'm expecting a huge move towards the downside, because for me to see a move towards the upside, for me I need to see a green candle. A green candle, that means a bullish candle. But for me, I'm expecting that particular move. And over here, what do we have? We have over here, we have resistance. You see that particular move. So you see that's $7, you know, over here, 7 points. So that's huge. And you see over here, you have your gap. So you see, yeah, you have almost a $10 move over here. I'm gonna put that in red, so that's bearish over here. You know, that's it. Okay, and take a look. That's your 21-week moving average. You see the large pointer, long pointer over here, came to interact, rejected it, and boom, came back higher. So me, I'm expecting that more move towards the downside, and in order to be bullish, I'm gonna need a close with a green bar, green candlestick above 83, 83.20, 83.40, and then boom, going back towards the 88, 87.50, 88. Okay, Oopla, sorry. Okay, now let's continue. Let's have a look at the small caps, Russell 2000, and then the yeah, we're gonna have a look at Russell 2000, and then the ETF, the IWM, and then we're gonna move on to fixed income. So here, take a look. That's perfect wedge up, and also a type of bullish flag over here. See, take a look. That's your bullish movement, your wedge up, and your bullish flag. You see resistance, support, resistance, support, resistance, support, and then boom, we are here at resistance. Inside week candles, 5 weeks of inside week candle, 5 weeks of sideways movements. Markets going nowhere. See the range, huge range between 1435 and over here 1396, 1400. So that's it. Still above the 4 weeks moving average, but I'm expecting to see that kind of movement. I'm going back here to interact with the moving averages. See 13, 21, and 26 week, and over here see 4 weeks and what's that exactly? 8 weeks moving average. You see interaction, rejection, boom. And that's not the first time. Take a look at the huge spread over here. That's volatility, So take a look now. Your 4 weeks moving average, it's pointing downwards. So it's gonna go and chase after the 8 weeks moving average around the convergence points. Maybe it's gonna be around 1410. Okay, so that's it. So I'm expecting more sideways movements over here. So we're gonna see with the earnings season, and maybe we're gonna see some days huge spikes and stuff like that, but for me you're gonna remain in sideways movements. Now let's have a look at the ETF, the IWM, and what's the price action over here. Yeah, see, I was expecting that for a long time. Same configuration over here. See, sideways movements in that huge wedge up, that bullish flag over here. We're going nowhere. See the range, 5 weeks inside week candle, the range 142 as resistance, and here as support 139. So we're going nowhere. But take a look over here. We have something more interesting. What's interesting over here? Very, very interesting. Take a look. We already have a close below the 4 weeks moving average. We reach here for the 13-week moving average, rejection. That's your 8-week moving average over here, and we are here. So next week, what we can see next week, maybe we see opening at that particular region, and then boom, and maybe we're gonna try to go like that, and here take that pivot point over here, and that's maybe your short-term view. See, like less than $1, 80 cents. That's it. Okay, that's for your IWM, and that's it for your equities. Now let's go on to and take a look at the treasury bonds and treasury notes. First of all, let's start with the TWI. That's your US 10-year treasury notes futures, and over here you see that's a bullish channel, and over here we are going lower. If you're going lower over here, you know that the yield is going higher. Okay, so that's it. Over here you see I was expecting more move towards the downside. Rejection, that's your 52 weeks moving average, that's your 104 moving average, and that's your 208 moving average. Take a look, 52 weeks moving average converging with the 208 moving average. You see over here 4 and 8, 4 closing crossing below, now converging with the 13-week moving average and going after the 21 and 26 moving averages. You see over here the pivot points close below, that particular level that was your kind of resistance, over supports over here. And then take a look, boom, huge move towards the downside. And if now if the bond yield, the bond price is going lower, the treasury notes price is going lower, that means that your treasury notes, your 10-year treasury notes yield is going higher. Okay, so what I'm expecting over here, I'm expecting more moves towards the downside, and we're going back to that region, 123.50. I'm expecting that more moves toward the downside. So that, what does it mean? That means higher yields. Now let's have a look at the yield, US 10, and your bond yield, as I said, boom, going up. You see, they are inverted. Higher the yield, lower the treasury notes price. That's it. And then the yield, now if it continues like that, I'm expecting the yield to rise and to go higher, and the yield to reach, you know, the resistance over here of 2.6% for your 10-year treasury note. Okay, now let's proceed, and now let's have a look at the treasury bond. Your treasury bond, first of all, that's exactly the same thing. We're gonna have a lower bond price. You see your bullish channel over here, support resistance, support resistance. You see 3 weeks, 1 week of indecision. That's a doji over here, strong bullish or bearish candle, followed by another bearish candle. You see, breaking below the channel's supports, and then boom, you see the pivot point at that region at 151.30, 151.50. We're already there. So now what I'm expecting more moves toward the downside. You see over here you have another support, like slash pivot point over here, because that's your wave like that. So we have first another support here, you see, at the region, this area over here, that's the area, that's your 208 moving average over here, 149.97. That's, yeah, 149.95 over here. See, 1, 2, and here 3. Here you have a small gap. So first of all, I'm expecting this type of movement. So remember, the lower the bond price, the higher the yield. So now I'm expecting a follow-up over here, like in next 2 weeks. Boom, the bond's gonna go down, and next, if it goes lower, I'm gonna clone this one. I'm expecting more prices, the bond prices to go lower, and maybe going back over here. So that's it. That's for the end of the year, maybe after the summer, you know, when gonna entering into fall, you know, end of September, October over here. But for the moment, for the short term, in the next 2 weeks or so, we can see that. Or also we can see a rejection. But take a look at the 4 weeks moving average. It's pretty far. So you see that moving average, the 4-week moving average already is pointing down. 52 weeks moving average over here, it's pointing down. So that's that means lower prices in the short term. Okay, so that's it. Oh yeah, now let's have a look at the bond yield. Sorry, bond yield. That's it, and as we expected, the higher bond yield over here. So now you see, first of all, in the short term, what do we have here in the short term? You see the pivot point over here, bam, number 1, like that, and next number 2, oh sorry, number 2, like that. So from here, if I have a continuation, boom, the yield's going higher. The yield's going to the 3.2. Okay, back to resistance over here. Okay, that's it. And now let's have a look at the DXY, the US dollar index. DXY, that's it. DXY, you see the DXY downtrend channel. You see a huge move towards the downside. You see supports over here at 95.50 inside week candle. So now what I'm expecting for next week, more moves towards the more sideways movements. You see over here we're trying to reach the 4 weeks moving average rejection. You see long tail over here. So take a look at all the moving averages, 4 weeks and 8 week moving average, or plunging, you know, going down with the dollar price. So now the dollar maybe is gonna go sideways. You see, like we already saw here. So what's the pattern? We have a pattern confirmation over here. We have a downtrend channel, and also we have a downstairs, you know. You see the step stairs, a downtrend step stairs pattern over here. You see first step, second step, maybe third step, and then boom, going lower. So now you know what to do for you guys, or me also. I'm trading also the forex, you know, all the currency pairs. See, maybe we have like a small bounce, small bullish, movements with the dollar, but overall in the big picture it remains bearish, for the midterm. But you see the dollar, if you take a look at the bigger picture, the dollar is still strong. Here we are trading in between a range of 104 to 94. That's a 10-point range over here, so that's bullish. That's a kind of big bullish flag, you see. And as we are at the end of if that's our resistance, if you go back over here to the support and then go back higher, that's your crown, that's your elbow, and that's your head, head and shoulders, patterns, elbow, no, shoulders, excuse me. That's your shoulder, your left shoulder, now your head. And if you go down here, you see your 208 moving average, go back here and then bounce and then boom, go down another time. That's your right shoulder, so that's a head and shoulders pattern, you see. But now we are forming a head in a downtrend channel, so I'm expecting the market maybe to bounce from here, or at that time when it reaches 94, 93, it's going to be interacting here with the 208 moving average and then going back up. See, that's your sideways movements, that's your support over here. So maybe the market's gonna come down here. You see the bigger picture, the big movement. I'm expecting to see this, and then what? And then I'm gonna clone this one, and then this. See, boom, and then another time from here. If we have a confirmation, we're gonna start to see this, and then maybe going lower over here like that. So that's your shoulder, left shoulder, your head, and another shoulder. So maybe we're gonna see that, because you see the highs over here, two highs, that's a higher high, and then over here we're starting to build up like higher lows and lower lows also. See, but the range we are trading in a sideways movement. The dollar is going nowhere. The dollar is remaining strong. If you see the dollar versus the Japanese yen, or the dollar versus the Chinese yuan, is still higher. It's still stronger. If you see the euro versus the dollar, the euro is lower right now. So that's have to, as I said in another video, that's a pure macroeconomics. You have to take a look at the balance of trade. Which country have a deficit. US is in a deficit, is running a deficit, and the Eurozone, the Japanese and the Chinese are running a surplus. So in order for them to export their goods, they have to it's better for them to have a weaker currency. In order for the US to buy those goods, US has to have a stronger currency. So that's pure macroeconomics. So have that in mind, and take a look and do your research. Okay. So now let's move on. That's it. Now we're gonna have a look at commodities. First of all, let's start with crude oil. The crude over here, that's your crude oil. Oh, sorry about that. All of my perspectives and indicators and trend lines are gone, so I'm gonna do it like that. You see over here you have your support at 28. You see the pivot point over here, another support over here at 43. Now we are trading at 43. That same support over here for the 1, 2nd, 3rd, 4th, 5th, 6th, 7th time, and maybe 8th time over here. And you see we remain bearish. That's a we are over here in a bearish channel. That's your bearish channel, and we are bouncing from the support like 2 weeks ago. Now we are going back towards the channel resistance, downtrend channels resistance over here, and take a look at all the moving averages. They are all of them are pointing downwards. See, boom, boom, boom. So we're gonna have a look like that. See, boom. Excuse me. I'm gonna do like this. That's better. Okay. See. So now, what I'm expecting, interaction over here at the channel's resistance, like at 47, close to 48, and we expect if we have a close above 48 over here with a bullish candle, a green candlestick, maybe then we can assume market is trying to go higher. But remember, we already seen a news talking about the OPEC and all that stuff, and all the problems, you know, in the Middle East with petroleum and stuff like that. So, you know, have that in mind, you know. And over here, a close below that particular region over here, 43, we are going lower towards 40. Okay, that's it for oil. Now let's have a look at we're gonna have a look at gold futures and silver futures, and for the ETFs I'm gonna let the ETFs for next week, see, because I'm gonna end that video. I don't want to make it very long. You see, take a look at gold sell-off, huge sell-off in gold. See, that's your highs, higher lows, low, and maybe over here you can form a lower low. Take a look at here, we have a pivot point at 1200. So the level, the key level is going to be here, the 1200. If gold loses the 1200, we're going to go lower. See, I'm expecting gold to go back here. Next target for me in gold, that's your 1175, 1180. So I'm expecting more moves towards the downsides here for your gold, 1180. Okay, that's it over here. That's your channel. Take a look at the big picture, and here you have your big channel. You see, there you go. Supports, resistance, supports. We are in the lower part of that particular bullish channel over here, and now we are going back towards the support. Okay, and if you lose that, you see pivot point over here at 1130, excuse me, 1130, and next one lower at 1050. Okay, now let's have a look at silver. Okay, that's your silver over here, and you see the same thing, support, resistance, support, and take a look, very interesting over here. Take a look, what did silver do? We are already below that particular channel supports over here. We tested it over here, we came back in, and then boom, we are lower. You see, that's your pivot points over here at 15, and another support over here at 13. So now I'm expecting more moves towards the downside. That's your downtrend channel over here. You see, supports, resistance, supports, resistance. Now we are at the support. If you go lower, first of all, the $15 for per troy ounce as a key level, psychological level, and then lower towards the 1380, below the $14 per troy ounce. So I'm expecting more moves towards the downside, or maybe see a indecision, a type of doji over here. You're gonna go back and try to, you know, try to test to retest, you know, the resistance. You see, bam, but that's another, see, higher lows, and another higher low over here, and another lower, you see, low, lower low, lower low, lower low. So that's it. I'm pretty bearish on metals. That's a good news, that's a great news. So that means that I can go buy physical silver and physical gold for cheap. So that's good. Okay, and now let's end this with Bitcoin. And for the Bitcoin, okay, let's have a closer look at the price action. Okay, over here, and for Bitcoin, what I'm expecting, Bitcoin going sideways. You see convergence between 4 weeks moving average and 8-week moving average. Take a look at the spreads between the convergence points over here at 25.30 and over here the 13 moving average at 21.87. That's huge. That's volatility. And now we are in a inside week candle, third week, the opening week now. It's also in inside week candle. You see the resistance like at 26.32, your support at 22.68. We are moving sideways. So for me, what's going to be a buy? A buy is going to be a bullish candle above this particular convergence point and above 2700 and below 2400, but that's very aggressive, you know. To be more conservative, and I'm in need of more confirmation that a bearish candle below, a complete bearish candle below that particular convergence point, so below the 4 weeks and the 8-week moving average, so around here, then I'm gonna be selling that, not selling my Bitcoins, but you know, now I'm in Europe, and here in Europe I can trade CFDs, so I can use leverage. I can leverage 20, 30 to 50 times, you know, with Bitcoins. So that's what I'm doing. I'm holding Bitcoins in my e-wallet, but now since that particular environment, since the highs over here of 3,000, now I'm more of a speculator. I'm more trading. I'm trading with CFDs, so that's better. So, you know, I'm avoiding, you know, to be involved with purchasing more Bitcoins for my e-wallets. So now I'm more in the trading area, you know, with cryptocurrencies. I'm trading them in my online brokerage account, so I'm doing speculative operations, you know, with Bitcoins. So now I'm expecting the Bitcoin to go lower, and if I have a close below 2250 over here, you see, maybe to be a little bit more aggressive, 2300. But if I see that that particular candle over here is a bearish candle, if that's a bearish candle, by the end of next week, I'm gonna be shorting short selling Bitcoins in CFDs. So that's derivatives. Okay, moving towards the 13 moving average, and if it goes lower, over here we have your 21 moving average and your 26 moving averages over here. You see, but take a look, the only pivot point and resistance now support is over here at 1300. So that's huge. You see, that's a lot of risk, and then I'm gonna risk money in order to buy Bitcoin. So I'm gonna short sell and do a lot of speculative trades with derivatives. Okay, so that's it. And now also let's have a look now at ethos. We're gonna have a look at Ethereum versus the US dollar, and that's the same thing, you know. Ethereum 3 weeks in a row with huge sell-off. You see over here the flash crash, and yeah, the same thing. You see over here I have like a kind of a resistance, you know, around 73.85. So we're expecting more move toward the downside. So over here, close below 4 weeks moving average, close below 4 weeks moving average, convergence between the 4 weeks moving average and the 8-week moving average, going after the 13-week moving average. You see the pointer, large pointer over here reaches the past resistance. You see, if we can let's say that's a resistance, you know, over here. So we have huge downside potential. See the upside versus your downside. So me, I'm more bearish. So now over here, if I see, you know, that's already something I can do. And we also have over here Ethereum in CFDs. We have a derivatives of Ethereum, so we can leverage over here and we can short sell it. So same thing as I said for Bitcoin. Now I'm not gonna purchase more Bitcoins for my e-wallets, but I'm gonna trade derivatives with my online brokerage account. So I'm gonna short sell the Ethereum now also. So over here, to be more really aggressive, below 220, short sell. First target 200, and if I see more potential towards the 21 moving average, 137, 150 over here. And take a look, we have a gap also. So that's my main target, you know. I'm gonna put my main target over here. So let's see how it goes, and I'm gonna be updating you on the news and on my positions and my perspectives, for the market. Okay, so people, once again, thank you very much, and hope it helps, and see you next week. Okay, have a great week. Bye bye.